Cathie Wood is selling shares of Tesla, and in this video I'm going to discuss Tesla's most recent earnings, why Cathie Wood is selling shares of Tesla, and finally 2 keys to portfolio management that you can learn from Cathie Wood. So here we have the chart for Tesla, and we're looking at the 6-month chart, and Tesla's up almost 60% in the last 6 months. And a lot of that has came in the last month, as we've seen Tesla run up here from around $800 to just before earnings being around $850, $860, and now after earnings running up to over $1,000, even over $1,100. So what did those earnings look like? So what we have here are Tesla's earnings, and you can see that Tesla beat on their EPS. So there was an expected EPS of $1.61, and what they reported is $1.86. So that was a 15% beat. And then on revenue, they also had a small beat, this one being $13.7 billion for expected, and reported of $13.76 billion. So what I like to look at though is what do the year-over-year numbers look like. So compared to 2020, you can see that the revenue for 2021, September of 2021, was $13.76 billion, and that's almost a 57% increase year over year. And diluted EPS, you're looking at almost a 400 or over a 400% increase year over year, with a diluted EPS of 1.44. So all in all, Tesla is showing significant amounts of growth and putting itself in a very good position for success into the future. So with all that good news surrounding Tesla, wouldn't you think that Arkk Invest is buying more shares? However, they're actually doing the opposite. Cathie Wood and Arkk Invest, as you can see in this article, they're loading up on Robinhood shares while selling more Tesla stock. And this was just published Thursday, October 28th. And they actually give the number of shares that they've sold, that Arkk Invest has sold, and it's around 57,000 for a collective of $59 million. And these aren't the only shares that they've sold over the last month. So here we have another article how Cathie Wood has dumped another 100 million plus of Tesla, and this was published October 27th. And then on September 9th, we had another article about Arkk Invest selling over $110 million worth of Tesla stock. And this isn't an uncommon occurrence. So back here we have May of 2020, and there you also see Arkk Invest selling more of their Tesla despite their long-term bull case. And at this time they were actually calling for a price target of $7,000. And what's interesting from this article, you can read here that it said that Cathie Wood is quoted saying it would not be wise portfolio management if she did not sell shares. So what we'll get into here on the next slide is what it appears she's kind of doing with her portfolio and how she's managing it. Here we have a graph of Arkk Invest's position in Tesla over time. So in this dark purple, we have the number of shares that Arkk Invest has of Tesla. This light purple, we have their cost basis or estimated cost basis. And this orange line, we have the actual price of Tesla. And what's really interesting are these red and green dots. So the red dots denote sales of Tesla stock by Arkk Invest, and the green dots are buys of Tesla stock. So what they've done a really good job of is selling these run-ups of shares and then buying dips. You can see here back in 2020, December of 2020, they sold a lot of this run-up of Tesla. And then here there was a little dip, they bought more, and then the stock kept dipping and they kept buying more until their position got to around 3.8 million shares. Then they had another little run up where they sold a few of their shares, bought again on this dip, and most recently we've seen Tesla kind of go on a tear, like we pointed out on that first slide, that Tesla's been up 60% in the last 6 months. So in the last 6 months, you've seen them sell quite a bit of their shares. And a lot of these red dots, if you remember, that first article was from 9/9, which corresponds to this red dot here of one of their major sells, and then another major sell here. And then you can just kind of see that they've kind of bled off their shares as the stock has run up. This is a huge key to portfolio management. So what Cathie Wood has done an excellent job here of basically selling into strength and buying into weakness. So what that means is when the stock runs up, where there's a lot of strength in the stock, she is a net seller of the stock, and as the stock goes down, she becomes a net buyer. As the stock runs into weakness, she buys more shares. That is a huge takeaway that you can have and incorporate into your own portfolio management. So here we have another chart, and this one is actually showing, the only line that has changed is this dark purple line. So the dark purple line is the weight in fund. So this is the weight of Tesla in her Arkk Invest fund. So what you can see is that she's managed her position around 10% weight. So overall, that means that 10% of her portfolio is made up by Tesla. Portfolio value is made up by Tesla. So what she's doing, you can kind of see it here, is that as the stock runs up, you can see that the weight in her portfolio is going up, and thus she is selling off shares when it kind of gets over that 10% mark. So here we have a big group of selling, denoted by the red dots again, and then as it kind of falls back down to earth, so it's falling below that 10% mark, you can see she's actually buying more. So around here she actually got down to 8.5% weight, and thus she bought more to kind of bring it back up to 10% of her portfolio. And again, you can see it ran up here, so she sold more off, bought a little bit more back in to run the percent up again. And then most recently, like we said, in the last 6 months, we've seen Tesla run up almost 60%. So we've seen kind of net selling from Cathie Wood of Tesla. So as you kind of see in here, you're seeing that it ran up almost 11% weight of her fund, and thus she's been selling off a lot of her shares. So again, this is a huge note in portfolio management. So what she's doing here is making sure that the weighting of her position is distributed so that she's in a comfortable spot, right? If she was only buying shares, as her position runs up, it's gonna take on a larger portion of her fund, and that can overexpose her to a certain industry where you never know what's going to happen, and something could cause the industry to dip. And right, if Tesla saw a 10% dip and all of a sudden the fund makes up, all of a sudden that's 100% of her fund, then she's going to experience a 10% dip. So she's actively managing her portfolio to make sure that she is diversified enough to prevent any large drawdowns, but also has a large enough weight of the portfolio of Tesla in her portfolio to capitalize on its gains. So there's really two key takeaways to this video and how Cathie Wood is managing her portfolio. As I mentioned, she is buying into weakness and selling into strength, and she's managing her position size to around 10% of her portfolio. So obviously you can adjust those things. 10% might not be adequate to you. You might be a little bit more willing to take on some risk and up that to 25%. You might want less risk. You might take lower that to 5% of your account. But basically you can manage your positions similar to how Cathie Wood is and capitalize on similar gains that she's seeing. And that's a huge way to basically take your investments to the next level, to really gain an understanding of how you manage your portfolio, not overexpose yourself, but also be a net buyer when things are weak and a net seller when things are showing strength. So overall, I hope you enjoyed the video. I hope you learned something from it. And if you liked the video, please drop a like down below. If you want to keep seeing videos like this, make sure you subscribe, and I will catch you guys next time.